right here. So I want to, all right, good recorder. All right, my friends, so we have, let me get Pablo up here. We got Mike Savino from the Director of Operations from M1 Finance on board. And we had a little bit of technical issues on the front end. So if you're seeing this little phone icon here, that's okay. It just means Mike is talking on his phone, but we can hear him just fine. But I'm a big fan of M1 Finance. Mike, I was made aware of it by one of my YouTube channel subscribers, and I opened an account about 2 months ago, and I did a video on it. Man, I love it. And I said, I forgot the guy's name who reached out to me, Patrick. Yeah, that's what it was. I said, man, I'd love to interview somebody about the program. So here you are. So Mike, give us a background, tell us your backstory, and tell us what you did before you were on M1 Finance, and how you find yourself here.
Yeah. So M1 Finance, I've been here since we started. We started in the spring of 2015. Prior to M1, worked for larger financial institutions, most recently Nuveen Investments, a big mutual fund shop here in Chicago and Minneapolis. Back in the spring of 2015, Brian Barnes, our CEO and founder, called me up and said, hey, you want to quit your job and help me get this going? I got a good idea. And then that's how we got it going. Took us about a year to get through all the regulatory stuff, obviously, a ton of that stuff in this space. Launched beta in spring of 2016 to friends and family, launched product to the public in the fall of 2016. So we're about 3 years in.
Man, no kidding. And you're in Chicago.
We're here in Chicago. Team of about 45 now here in Chicago.
Cool.
Yeah, it's exciting. Got some new office space coming in Jan 1. So moving a little bit out of the scrappy startup mode. We started in Brian's apartment back in 2015. So we're moving on up in the world. But yeah, so the impetus of M1 Finance was always, let's create a platform for how we wanted to manage our money. Yeah. Me and Brian, both self-directed investors, and I think a big word there is the investors part, where a lot of the discount brokers, the E-Trades, the Schwabs of the world have done a good job helping self-directed investors, kind of giving them a ton of options, but they were built on a per trade model. They are built for traders. That's who makes them the most of their money. So we're like, well, shouldn't something exist for people that are self-directed and do want to choose what they want to invest in and take advantage of all this new automation that's coming around from the robos of the world and the technology and the mobile first platforms and all of that kind of stuff. So we wanted to say, hey, you come to us, you just tell us what you want to own. So when you come to M1, you can create a portfolio of we've got 7,500 stocks and ETFs that trade on NYSE, NASDAQ, and BATS. You come to us, you create that portfolio on a percentage basis, and then you kind of just set the automation. So you say, you can give us $100,000 or $100. You can give us $20 a month or $1,000 every 2 weeks. You can set those kind of structures. You can have your money automatically redeploy when you get your dividends. You can allow it kind of to build up as cash and then make those buys. So you kind of set it and how you want to manage your money. Since 2016, that's when we launched the brokerage platform. The big kind of moments in our history was December of 2017, we went completely free. We had a wrap fee, an AUM-based fee before that. So we went free, and you see the whole world. If you look back at our blog in 2017, basically our thing was we realized we could be free the way the structure works. And on the brokerage side, just kind of like banks are free, your checking account's free. Brokerage accounts can be free too. We also saw that that's the way the world is going, so we might as well get out in front of it. Yeah. And we saw that a month ago that the whole world did go free, so happy to be there first.
Why do you say a month ago the whole world went free? What you talk about Schwab or Vanguard or something?
I'm talking about Schwab, and then Interactive Brokers actually went a week before Schwab. At least on retail equity trades, they've all gone free. So Schwab went, and then immediately E-Trade, TD Ameritrade, and the like all followed suit. So free is no longer a super competitive advantage, which is a whole new world, but which means it's kind of a level playing field that free is expected now. So then it is, what does the product do for me, and how can the product allow me to manage my money in a better way that maybe you're counting better as I save more, counting better as I have more choice, counting better as I have more access to it. However you're counting that. So it is a product challenge now, which we're happy to compete in. The next big things were spring 2018. Right after we went free, about 3 months later, we launched our portfolio line of credit product, which is called M1 Borrow. So any account that is over $10,000 on our platform, any taxable accounts, not IRAs, you have immediate access to a portfolio line of credit at one of the lowest rates on the market right now. It's 3.25% for our Plus subscribers and 3.5% for all subscribers or all account holders. And that product is really portfolio line of credit, especially coming from institutional space, is a tool that has always been used by the ultra wealthy, but there's no reason that you shouldn't have at least access to that and have access to that line of credit for once you are over that 10 grand, 50 grand, 100 grand. Right. You don't have to use it, but if you ever have those liquidity needs, it's kind of always good to help you there so you can plan accordingly.
Absolutely. Right on.
And then this year we just launched our checking product, which we call M1 Spend, which comes with 1.5% interest for the Plus subscribers and 1% cash back on it. The real goal of all of that, though, if we can go back to the beginning, was M1, which will maybe you can ask me later why we called it M1, and then we can get into that. But it was always meant to be this holistic product that allowed you to create the automation and remove all of the frictions in investing your money. Take away, hey, I have a checking account and then I have to move money to my brokerage account. There's fees or there's things that involve there. If I need to borrow, I need to have a mortgage, I need to have a car loan, I need to have a home equity loan, and all of the frictions there. Yeah. By combining all of them and removing those frictions, and the biggest friction obviously being cost. So I tried to start with that one, and allowing the flow of funds a little bit better just allows you, if you want to, and you are kind of the self-directed owner of your finances, to more efficiently manage your money, which is always kind of our mainstay. Just be a little bit more efficient with it. So that was a lot of words, but that's the history of M1 in 2 minutes.
With the free, I mean, you got to make money. So this is a question I always get. I don't know the answer. I mean, I get margin, I get all that stuff in terms of, Schwab and their intelligent portfolio that keeps 7% cash. I get all that, but how does M1 make money?
Yeah, so we make money kind of in the same way banks make money. So that you can hold cash in our brokerage. We, like you said, Schwab makes you hold cash in their intelligent portfolio. We don't force you to hold cash, but people in all brokers of all time, you hold a little bit of cash in there. So we make interest like a checking account makes interest there. A second way we make money is on security lending. So being able to lend out positions that you own to short sellers at other brokerages. So kind of the same way that we make interest on cash, we can make some interest on direct equity ownership, which allows us to monetize those positions. We then make money on an explicit charge for that line of credit. So you're explicitly paying for that. So I think that one's the easiest to explain. And then with the spend product, cash deposits held in the bank, and then when cards are swiped, same way a credit card company makes a little bit every time a card swiped, we make money there. In reality, the nice thing with Schwab going free and E-Trade going free, because for a long time, the same way you had this question, there was a question about M1 and can you be a real company? This free scared a lot of people, like there was some sort of scam or something going on in the background. So at least Schwab and E-Trade and all of them, yes, it makes it more competitive, but at least they've answered the same question that we've been trying to answer, that they've just been able to charge for a long time, so they kept charging, but they didn't need to. If you really look at those discount brokers' financials, it's really 10 to 20% of their annual revenue was explicit equity trade commissions, and the rest of it was everything else. So that's why they were able to go free. They just didn't go free because they didn't have to. Why do it if you don't have to?
Well, it's just funny. The level of fees now that are, the old days, if you're, charging 25 basis points on an ETF, you're like, we are. Now everyone's like Schwab, put an ad in the Wall Street Journal saying, we are even 30% cheaper than Vanguard. I was like, dudes, but this game is well beyond. I mean, this is old now. I mean, nowadays it's so doggone cheap. It's irrelevant anymore. It's funny. It cracks me up the competitors who have driven the cost low. It's capitalism at its finest, man. Even though it took you a year to have the regulatory agencies approve it, it's still. I mean, that's the problem. Is that's the barrier to entry, and I'm surprised you guys. I would have gone crazy, man. I don't think I could have dealt with that. But
now it's good to be on this side of it now. now it's good.
Yeah, but, once you're here, it's like the water's warm, but man, you got to get to the beach to jump in the water. You know what I'm saying? Like,
for sure. Which I mean, there's a reason for all of it, and you can't just be signing retail clients up across the country without it. But yeah, it's part of it all. Which I think the big reason why financial and fintech has gotten popular over the last 10 years, which seems like the last industry that is really making this move, because of all those barriers, because people are more comfortable with the Chases of the world and the JP Morgan and the Maryland, because they have those names and those histories, because money's emotional. You're not finding M1 on your phone and ready to give over your life savings. But I think we've come to a point and a little bit of a tipping point where people are getting more comfortable with internet first companies, mobile first companies, and seeing that there is not the special sauce. We're regulated. We follow the same exact rules as the big guys. We have the same SIPC insurance as the big guys. So it's all kind of the same. So it took longer. People are slower to move it because it is money, and you're ready to download Uber the next day. You're like, I'll try it. I'll delete it tomorrow if not, but I'm not ready to transfer over my Schwab account to this new thing I got on my phone. So it does come with this challenge.
Me. And I mean, this is what happened to Vanguard. It took Vanguard forever, and then next thing you know, the floods are open, and now they got. I mean, it's just that once people got accustomed to it, you can read the writing on the wall. The big wirehouses, it's doomsday scenario, and hey, that's fine by me. I mean, my goodness, they were making a lot of money for not putting any. This is me talking, not M1, but making a lot of money by adding not much value. In fact, if anything, I'd argue taking away value was pretty heavy fees. But nowadays, it's funny because a guy. We always think the older people, and I'm 49, so I'm not young anymore, but the older people, the baby boomers, they don't like finance or technology. And it was the older people that told me about M1. And I said, let me check this out. And same thing. I started with, I think I put $1,000 in there. I do like $500 a month. And I just had the account for 2 months. And once you get a level of feel, your end of year statements, you see all that's going on. It's only a matter of time if I roll more money over there simply because it's easy. Let me ask you a question. I do like, one of the things I love about M1 is that you can buy a set portfolio of ETFs, like we'll just use Dogs the Dow, a strategy. You know what I'm saying? How does that work? Like, do you contract out with people to do, like, how does it even work? Who does all that stuff? A guy named Craig Israelson does a 712 portfolio, and I'm a big fan of that kind of stuff, but I'm not a big fan of having to go in there every month and buy an ETF of all these different things. And that's how I found you. I said, I don't know a solution to this. And some guy said, you just go to M1. I said, what? So how do you get that logistically where you have all these different strategies that anyone can buy into? It's freaking awesome.
Yeah, no, I think that's the exact mentality we always had, where it's something that just made sense to us. And we were shocked that it didn't exist, where you have these things you want to own on a percentage basis, and I just want to deploy capital to it. And with the automation and technology where it is, in reality, all of our trading and our portfolio management is proprietary software on our side. We handle all of the trading here in-house, and that's actually a big thing of what I do here. But you're mentioning kind of our pie infrastructure.
Yeah,
so
exactly.
Create this portfolio based on what we call pies. So every slice of your portfolio can be an individual security, or it can be its own portfolio itself. It's kind of like a nested folder structure on a computer. And when you invest money, it kind of waterfalls down into what's underweight, what's overweight, trying to always push you back. And then on the fractional trading side, we allow you to trade down to 1/10,000th of a position, because in reality, it's computer anymore. Like we don't have to trade in full lots anymore.
Right.
We don't trade in individual positions anymore. So we're able to allow you to allocate down to the penny on each of those positions and help exactly in your scenario. Somebody, I have this, I want to put money to work, but I think what you're mentioning is most people in that scenario, then they only invest once a year then because it was painful. So that's not the most efficient. I mean, it's the oldest thing in the world. Time in the market is better than timing the market. And it's like, yeah, so you're wasting 12 months every year on not putting your money in. So just forcing it to come out of your paycheck. Also the good behavioral economics thing of if that sits in your bank account to the end of the year before you invest, you have a lot better chance of spending that money before the end of the year.
Yep.
So trying to make everything work more efficiently. Yeah. So we
how do you get M1, the actual pies though? I mean, you got tons of pies on M1. I'm like, well, literally as a, I could literally waste, weeks on end just examine them all because I like that stuff. I like the data. And I told myself, don't do that because I'll never come back up the rabbit hole, which is good. But how do you get all those pies? Like, I mean, do you go out there and say, I don't know, Josh has a freaking sunshine pie and let's talk to, or how do you get them on the platform?
Yeah, so there's kind of two flavors. We do have a menu of what we call expert pies, which are created in-house. There's about 70 of those. They're similar. If people are familiar with Betterment or Wealthfront, they have those similar type of just like general investing methodologies. There's some cooler, more specific ones like our hedge fund tracking ones and all of that. But the nice thing is with the M1 and the community that's able to build is that we allow, and I think what you're mentioning, and seeing that dogs and DAOs, because that's not something that we've created or the other portfolio you mentioned.
Right.
If you create this allocation based on percentages, we allow you to share that. So people do share pretty actively on Reddit, and people share on their Twitter, or they can email their friends and family. Maybe your friend or your brother has a little bit more knowledge and he can help you and he can just share that portfolio with you directly and you're able to click on it, add it to your own account, create your own account. So it does the social aspect is helpful there because there's a lot of people that know a lot that are around you that maybe have good ideas. People just share what they're investing in. Obviously doesn't show how much money or anything you have, just shows that static allocation. So in reality, most of it is user generated, and that's where we find excitement there because people do like it. People do like sharing it.
That's cool. So that's all those different I know you got the expert ones, and I saw these other ones too. I say that there's just dudes out there and ladies saying, "This is my idea. I'm going to share it with the public, and they can use it or not."
Yeah.
That's fantastic, man. That's pretty cool. And the nice thing I found about M1 too is if you go like a complete passive, right? This is what I tell people. Say, man, you just buy the total stock index and whatever. And then he said, but I can also buy these other strategies in case something else works. You see what I'm saying? Without reinventing the wheel, without pulling my hair in my head to actually make the trades and all that. You just put the money in. It's fantastic. And I just, that's the one thing is like you said, if you don't dollar cost average in, you're probably likely to spend the money. And who actually wants to go in there and buy 122 shares of XYZ and 192 shares of ABC? No one wants to do that. And no one's going to do that. So it's kind of like the best of both worlds. Now, I guess the one thing is you guys trade like a mutual fund once a day. Is that it? Or how does it work in terms of the actual execution? Again, sorry about my dog here. He's nice to get on camera, Mike. He's a camera hog. You know what I'm saying?
I see it. Yes, you're correct. You're mentioning our trading window. So we do trade once a day. We actually now trade twice a day for our Plus subscribers, once in the morning and once in the afternoon. And the whole reason for trading once a day, one, keep costs down for users, but or I guess that's the secondary reason. The first reason is for fractional share ownership. So functionally, how fractional shares work is that when you go to the street to actually purchase something, you have to buy it in full shares.
Right.
So for us to be able to facilitate everybody's fractional share ownership, we have to be able to buy everybody's Apple during a single period. So then we can allocate the 2.3 shares to Josh, 2.7 shares to Michael, 1.2 shares to Steve, and then M1 will take on the rest.
Gotcha.
So it's really a matter of the fractional share ownership.
Okay. Gotcha. And I being frank, I could care less about the trading active during the day. I mean, it's no other different than a mutual fund. I mean, that's, mutual fund executes at what, 4:05, and if you got
Yeah.
your order in and your pre-market order is still not going to execute till 4:05, it doesn't matter. So yeah, what's the backstory behind the name of M1? I am curious about that.
Yeah, M1 was always a play on the money supply definition, so the government's definition of M1 money supply, so the most liquid money supply.
Gotcha.
Because the whole thesis behind M1 was that we started in 2015, you're like, a share of Apple is just as fungible as a dollar bill on the street, probably more nowadays, like you can get actual physical cash, where there shouldn't be this restriction between the two. It's all ones and zeros on a computer anyway, so we felt that a share of Apple or that portfolio line of credit or actual physical cash or your debit card should all just be as fungible. We have an immediate price for all of those things. So if you can create a world where all of those are just as liquid, that was kind of the goal here at M1.
So Brian is the initial founder. He's got to be an economist by trade, I guess, right?
He went to Stanford, obviously they all do.
Okay.
But then no, he was a management consultant out in Los Angeles before he started this. But by trade, I think his whole story is mostly he's managed his money by his own on like TD or one of the other discount brokerages from a pretty young age. But he was always a investor, and he always had a separate Excel spreadsheet outside of TD Ameritrade to manage what percentage allocations were in what's overweight and underweight, and then going to TD Ameritrade and typing in and executing those trades to stay on balance. And it was, hey, why it's been 15 years of doing this? Why aren't there the tools for investors? And I think the answer is they're not profitable for those guys. They need trades, they need darts, they need all of those things. So creating a model that has no branches, low cost on our side, so we can be the solution for people that are more passive in their trading but active in their choice.
I think that's great. And I don't know, is it proprietary? How much assets has M1 raised so far up to this point? Not investors, but actual, I own an account at M1. So how many?
Yeah, so we're right at 100,000 customers, funded customers. We just went over that, and right at $750 million. On the platform. But growing really quickly, more than doubling since the beginning of the year. So
more than doubling since the beginning of the year.
Mm-hmm.
Okay. Wow.
Yeah. We'll probably more than triple by the end of the year. So we're excited about it. The nice thing is you found out because somebody told you about it. We get a lot of our growth that way because M1 and all these fintech players can kind of look the same if you just went to our website, Betterment Rounded, Stash, Wealthfront, all these guys kind of look the same. So it does take how you're explaining somebody to maybe tell you, nudge you, and then you throw a couple bucks in. And M1 being a more passive investor does show its value in the longer term. So people do slowly understand it and start to feel comfortable with it, and then they make those bigger transfers of their brokerage accounts and et cetera. So it's been exciting.
Where do you see yourself, 5 years? I mean, obviously, I don't know, but I can see Ameritrade, E-Trade, Scottrade, and I get that, but they're all no longer. They're all part of a bigger firm. And I'm wondering about if you have thoughts on the Betterments, Wealthfronts, the M1s and whatnot. Is this, it's like is there enough sustainability for M1 to stay independent? Look, I got no call. I used to work at Schwab many, many years ago and Vanguard many years ago. So I don't as at all. But at the end of the day, the nice thing about the separation is it does create the competition that drives Schwab to be free. It drives Vanguard to be free. You see what I'm saying? But yet if M1 were to be tucked into Schwab or Vanguard, that eliminates some of the competition. I just wondered any thoughts, and obviously I get it, you work there, but any thoughts on that? Can you keep an independent streak for a few years to come, you think?
Yeah, that is our goal. We've always set up our kind of unit economics on how much we're able to make per dollar on the platform versus how much it costs us to get per dollar on the platform to make sense in the long term as we scale. Obviously, for M1 to have ultimate success. Scale will forever be the name of the game, so we'll need to
Yeah.
get up there. But
Yeah.
the way we've built our financial model and our revenue model, it is based on a self-sustaining organization, and that is the goal. It is why we've been able to get our users to date, is because we've had full say in creating these tools, and we're super excited about
Yeah.
the next phase in our product, because this has always been our vision, and we've always been marching towards getting all of these kind of pillars of our organization and kind of the utility with these other financial institutions, and being able to move money, invest money, borrow money. And now the nice thing is that we have the utility pillars in place. Now it's make it so much better for the customer, make the product so much smoother, make sure that you guys understand and see the value, and add additional features that solely are adding value, because we no longer need to build these kind of structural pillars with the regulatory issues, working with other financial institutions issues, and all that kind of stuff. So having in place where we can move money, invest money, and borrow money really opens up our product to create new ideas, things that people haven't seen before. People make it so you can manage your money in a completely different way. So super excited about the product, and yeah, having full ownership of that comes with owning yourself. So that is the goal.
Couple last questions, we'll let you get out of here. But I haven't had any 1099s. Obviously, I haven't had my M1 account. But I mean, the 1099, the end of year tax statements, those come from M1 specifically. I mean, you'll get those emailed or in the mail or something like that.
Yeah.
Okay.
It's just like any other broker.
Okay. Just a regular old broker. And you said you had SIPC coverage too, so you were a real legit SIPC. Okay, gotcha.
It's we're a regulated broker dealer.
The broker, right? Okay.
Everything's the same. With your tax, we have you download them on the app. We have a TurboTax integration, so if you use TurboTax, it'll link you right up there, so it loads it up for you. So just like anybody else, which has always been a struggle where you're new, but what is the same between us and JP Morgan is that we have to follow the same exact rules and regulations. So they can spend a little more money and focusing on it, but we are the same kind of regulated entity.
So last question I got, Mike, is that, this dog's name is Pablo. So I could literally go out there and put a Pablo portfolio, for instance, and I could name it that, I could create it, and then I could, save it for other people if they were, I mean, I'm not going to do that because it bores me, but I know some people like that. They could actually create something that other people can view, not their assets, I get that, but what the gist of the portfolio was, and other people can buy into that as well. Yeah.
So
that's crazy.
You have a portfolio allocation that you've created, or an individual pie that you've created. People share them with their friends and family. People share them on the internet to show what they're doing or get some advice on what they're doing. So it is a nice structure where all it is this portfolio allocation. It's all we've always been doing, but this just kind of makes it a little bit easier to share and see visually, which makes it easier. And then the other nice thing is if somebody, we do have a user referral program. So if somebody clicks on your portfolio and opens their account and you're signed up for the referral program, you make a little bit of money too.
So if you create a portfolio that someone clicks on it and then opens an M1 account, basically through your portfolio you created, you get, a small, $50. I don't know. You don't have to say what it is and people can figure it out, but you get some kind of referral fee for that. For user referral, like people see, kind of like anybody else that has a user referral program. But the nice thing, you can use your link to get people to sign up. But the nice thing with M1, you can also use your portfolio link. So a little bit more of a selling tool. That's awesome. No, that's fantastic. I love it. And just folks, in the efforts of disclosure, I actually, if you open an account through me, my M1 link, I get paid tons of money. Right. I'll be rich. I tell you, but that's good stuff, man. That's the way it works, man. People share the knowledge of anything that's out there that works for them. And I just like the idea of you can create your own portfolio and share that with people. I think it's cool, man. I think that's I don't know if you can do that. Look, I'm familiar with Betterment. I don't know if you can do that or not, but at this stage, once you get a product that you like and you're comfortable with, and for me now is M1, I don't really care what other firms do. I just like what I see. Sure, that's for sure. And I'm telling you, man, my only concern, and this is not for you guys, that would. Is a 1099 crap, man. It's not just M1, but JP Morgan, all the big wigs and little wigs. That is such a friggin' pain in the ass. And I'm like, oh, please make this easy. But any last words for the audience here, Mike?
What's up?
Any last words, any thoughts jump out at you that you want to share with the YouTube and podcast world that we're going to put this on?
Last thoughts. M1 Finance is a great platform. If you take my word for it, the nice thing is it's only $100 to start. So, like Josh said, it does show its value over time, and it's getting comfortable with the new system. But you can always give it a try. It's free to try. You can leave if you don't like it. So, what I would say is it might look and smell and feel from the outside like something you've seen before, or like any of the other brokers out there. But if you are a passive owner and just a longer term investor, but you do want to have some active choice, but the frustration of managing all that keeps you from doing it, that's kind of right where our sweet spot is.
And then lastly, once you start with $100 a month, for instance, just use that for example, and you're pretty comfortable with, you can do a trusty to trusty transfer or direct rollover from other IRAs and your employer plan into an M1 IRA or something like that.
Yeah. That's the other thing. Yeah, we do have all account types. So the taxables, the joint, individual taxable joint, the Roth IRAs, the traditional IRAs. And yes, just like any other custodian, you can come straight from Schwab, straight from E-Trade, straight from Vanguard if you want to, and our team handles that for you. And then the direct 401k rollovers into your IRA here
cool,
too.
Man.
So just like any other broker.
All right, Mike, appreciate you being here. That's good stuff. And folks, again, I'll put a link in the show notes, but M1 and the website, I can't remember off the top of my head. What's the website, Mike?
M1finance.com.
M1finance.com.
And then you can get us, we're mobile on both iOS and Android too.
Cool. Thanks, Mike. Thanks for being
Full
here. Full
functionality.
Hey, thanks now. We'll see you.